2016 from a trading perspective is surely but slowly coming to an end, and for the most part, from my opinion, that means less is more. So you want to do less trading, more conservative price targets, and just generally less stress, because the worst thing you can do in the last couple of weeks of the year is to force trades and by so doing mess up your trading performance for the year. So there's a couple of specific things I want to focus on. Let me quickly show you guys what I'm talking about. So the number one thing you want to focus on into year end, the last 2 weeks of trading for any given year, my opinion, is just be more conservative. So you have to understand that the average true range, or the average daily movement, so to speak, in stocks will tend to slow down. We could certainly get one or two outlier days where volatility picks up, but for the most part, the volatility into year end will be somewhat muted, or at least that's historically what tends to happen. So, for example, one stock I'm looking at right now, and this is not a suggestion, just something I'm looking at right now to give you an example. I'm looking at shares of Monsanto, ticker symbol MON. Now I see a very tight technical pattern. I see some of the agricultural commodities looking better. So these are all things why I would think that the stock could actually start doing fairly well over the next few weeks or so. Now this has not set up just yet, but I would not expect this stock to move dramatically into year end. So even if the stock were to start breaking out of this point here, and maybe it starts moving a couple percent or so higher, to me that would probably be good enough for a trade into year end. So you don't want to be too greedy, and you can apply that to any stock really here. Any trade you're going to do, it's probably most likely going to be somewhat muted. So be more conservative with your price targets, but also be more conservative with your size. So smaller trading size, as well as more conservative price targets. Number two is a very specific trade that actually works in this type of environment. It's called the open gap trade. I recently highlighted it, and just so you know, I will be making a course on this. But the open gap trade actually basically focuses on an environment such as what we tend to see into the last couple of years of any given year. And that is when you have an open gap. In this case, we're looking at the S&P 500 SPY ETF contract, and you can see that we had an open gap here, higher open on that one specific day, and then it retraced lower very quickly to close that gap. There's a strong tendency for that gap trade to work in the last couple of weeks of the year, because of the markets tend to be somewhat more range bound, somewhat more choppy, and even if they do trend a little bit higher or lower, again, it's going to happen with less volatility. So that tends to mean that when the market gaps higher, or gaps lower for that matter, it'll tend to mean revert back to the previous day's close. So that is a very simple but straightforward trading strategy. So again, to summarize, number one, trade in smaller trading size. Number two, more conservative price targets, because you don't want to ruin your year in the last couple weeks of any given year. And thirdly, one specific trade that tends to work out is the so-called open gap trade.